Welcome to Edison TV. I am Neil Shah, Director of Content and Strategy at Edison. I am delighted to have Grant Foley, CFO of Braemar, with us. Braemar is a shipping services business listed on the main market, reported results last week. Great to have you here, Grant.
Hi, Neil. Thanks for having me.
Grant, you're a new FD. You arrived at Braemar in August last year when Braemar's shares were still suspended. Could you just demystify the situation a little bit for us and explain, how the management team have overcome all the legacy issues?
Sure. Yes, when I arrived, the shares were suspended. There's been an independent internal investigation that had been led by our chairman into some legacy transactions. FRP, the forensic accounting firm, had come in to go through all of that and really take a detailed look at those transactions and anything else around it with some legal advice as well. We had an external firm of lawyers. I mean, to say that the investigation was complex, it was very thorough. It looked at everything, and ultimately it was focused around a handful of transactions from 2006 to 2013. As a new incoming CFO, it actually gave me a lot of confidence that it had been so thorough, and we'd had these external parties looking at these transactions and really understanding that. Ultimately, as I said, those handful of transactions, but the fact that it was such a thorough investigation led by our chairman and that independent committee gave me a lot of confidence as an incoming CFO that we put those legacy issues behind us and we can now move on driving the business forward.
Okay. And the group has, if I look at what it was maybe 8-10 years ago, it's almost a very different group today. And the refocus of the group has been led by James Gundy over the last 3 years, driving to exit non-core operations. Now the group is purely on shipbroking and related activities. Has that been a positive for the management team at Braemar?
Yes, I think it has. I mean, James came in as CEO in 2021, and James has been a shipbroker all his life, 40 years, sort of as a shipbroker, so understands shipbroking from back to front. And if you think about where Braemar was at that time, we had a number of divisions. We had a technical business, a logistics business. In total, I think at the time the group has 1,200 people. And it was quite a complex group. So we really focused on restructuring that, simplifying it, and focusing on the core competencies of shipbroking and the complementary securities business. And that took the business down from 1,200 people to 400 people. Those businesses that we disposed of were lower margin businesses that had quite high cost base. And so the business has been very much refocused on that shipbroking and security piece. And you can see that strategy is coming through, In 2022, the business done 101 million revenues. In 23 and 24, 153 million pounds of revenue. So you can really see that strategy is delivering, and the management team are very focused just on those core competencies.
Well, let's expand on that sort of growth strategy a little bit. So you've got a leaner, more focused group. Let's talk about the growth strategy and give investors some sense of the opportunity that's available to Braemar.
Of course. I think we've got 3 pillars really to our growth strategy. The first is continue to grow through the growing shipping market. Global seaborne trade continues to grow. There are more vessels at sea, so that gives us an opportunity to continue to grow our business just through the natural growth within shipping. That's number one. Number 2 is to continue to hire talented individuals and teams. And we've executed on that strategy as well. If you look what we've done, we brought on the natural gas team to complement our securities offering. And the third piece is selective acquisitions. So shipbroking is a very fragmented market and continues to be so. There are lots of smaller operators in key pockets of the industry that we can make acquisitions. And when we acquire those businesses, what we want to do is ensure that being part of the Braemar group, they have access to our data, our intelligence, our wider network and our brand to ensure that they become more than they were on their own. So it's not just bolt on and carry on as you were, it's come as part of the Braemar group and grow your revenues. And we've seen really good success of that with our acquisition of Southport Maritime in Florida in the USA and the Madrid tanker desk that we made at the end of 22. So it's really 3 clear pillars of growth and we're executing on each of those.
And then let's pick up on the first piece around that, which is, the shipbroking side of things. It's clearly more complex than just logistics, right? And global trade. So could you sort of expand on what the sort of key growth drivers for the global shipping fleet are and how that sort of contributes to the growth of Braemar's overall marketplace.
Yeah, so the fleet has grown,
Yeah.
undoubtedly, and I think seaborne trade is up like 2% from where it was
Yeah.
a year ago. So that puts us in a good place just as the market continues to grow. But there's a lot more going on within shipping, as you alluded to. So there's obviously the geopolitical events that you see going on in the world. So less activity through the Red Sea. This means that ships are taking longer routes, which means the ship that was going to be in a certain place at an expected time isn't going to be there. And so that creates a little bit of a supply issue as well, and where these are, which puts some pressure on rates as well. There's also natural events. So there's been some congestion within the Panama Canal where there's been a lower rainfall, which has meant less ships can go through, and that's meant they've taken longer routes as well. So there's always quite a lot of stuff going on within shipping. And of course, every ship is different, every cargo, and there's natural events in terms of the route, etc. So there's always a lot going on in the shipping industry. Quite nimble, knowing where the ships are meeting our clients' needs to ensure we can get the cargo from X to Y.
Yeah. Okay. So the shipbroking operations make up about 70% of group revenues, roughly. Okay. But could you outline the core activities of the shipbroker and how that then translates into revenues for the group?
Of course. Yeah. So at our heart, we're a middleman.
Yeah.
So we know the owners, so we have relationships with the owners of the vessels wherever they are around the globe. And then on the other side, you have the charterers who have a cargo that needs to move from X to Y. Now that cargo could be oil, refined or unrefined. It could be iron ore, coal, whatever that may be. But we have built relationships with the owners and the charterers, so we can match these through the data, the intelligence that we have, and organise the routes and negotiate those routes between those two counterparties. Then the charterer will pay the owner for moving the cargo, and we charge a commission on what the charterer pays, typically 1.25%. So it's just a commission-based business, no balance sheet risk or anything like that.
Yeah.
And it's all about negotiating those deals between owner and charterer.
Okay. The two other divisions make up 30%: investment advisory and risk advisory. Same question. What are their core activities, and how does that drive the revenues, and how are they complementary to each other and the shipbroking activities?
Yeah. So our investment advisory division is really split into two areas of the business. The first is corporate finance.
Yeah.
So we have a corporate finance business, and that's core activities really are working with owners to get finance for new vessels or restructure existing finance. It could be doing some M&A within the shipping space, but that's their focus. And we've got offices in Germany, Singapore, Athens to really help owners and other people in the corporate space. And within that investment advisory, we also have sale and purchase. So that is sale and purchase of vessels, whether they be new builds. Yeah. So working with a potential owner to negotiate a new build with the yard, or whether that be a tanker or a dry cargo carrier, whatever that may be. So on new builds as well as second-hand. So there's a big second-hand market in vessels as well, where an owner may want to dispose of vehicles. It may say the asset value is high, so it would like to make a disposal and invest in some other areas of the fleet. And also demolition. Vessels get to a point where their life is over, so they need to go and be recycled. So we do the whole piece around new build right through to second-hand sales, right through to end of life and recycling. So that's our investment advisory division. Our risk advisory is our securities business, which is highly complementary as well. So our securities business do what we call FFAs, which are forward freight agreements. We do those on the oil side as well as on the dry cargo side. And that allows charterers and owners to sometimes hedge their risk if they have a view on where freight may be going. So there's that part of it. We also have a natural gas desk. We have an oil desk. We have a coal desk. So quite complementary to the overall shipping piece. Yeah. Importantly, we do not take balance sheet risk. We are a broker. So we are just acting as agent, matching up trades and taking commissions as we do on our shipbroking business. Now, the way that they all join together is very complementary in that if you start at the beginning, we can work with an owner to finance a vessel for our corporate finance piece. Yeah. We can work with our sale and purchase to organise a new build or a second-hand purchase. We can work with our chartering desk to then go out and get a time charter or a spot charter or whatever that may be what the owner's looking to do with the vessel. And then finally, we can actually work with them to hedge any of their risk for our securities desk. So you can see the whole value chain right through the business.
Yeah, so almost like a one-stop shop for an owner to come to. You take him through the sort of life cycle of that journey.
Absolutely.
Yeah. Okay. So just reported results, and they were robust compared to sort of previous years. But when you look at the numbers and compare, FY24 revenues to the prior year and FY24 profitability to prior year, how should people read them? What are the sort of positives that you see in the results?
Yeah, we talk a lot over the last couple of years about diversification within the shipbroking space and building resilience within the business. So as we all know, shipbroking is a cyclical business.
Yeah.
And if we look at FY22 to FY23, revenues went up 51% and underlying operating profit doubled. Now, what we saw there was strong performances across every part of the business. The rates were strong in all chartering sectors. Investment advisory had a strong year as well, and the securities business continued to grow. We've maintained revenues in this current financial year in a very different way, which I think really does illustrate the point around this resilience coming through. So if you look at it, so revenue's flat, but there's a lot more going on if you dig into it a little bit. So our chartering revenue grew by around £5 million, 99 to 104 million. But within that, what we actually saw was dry cargo rates were down around 35%.
Okay.
So dry cargo revenues dropped 14 million. Now that was offset by strong performance in tankers, driven by the acquisitions that we made the previous year, Southport Maritime and the Madrid tanker desk.
Yeah.
We saw strong performances in rates and specialised tankers as well. So that offset the reduction that we'd seen in the dry cargo market for our overall chartering business still to grow. Investment advisory, the corporate finance and sale and purchase piece, revenues in that area can be typically more lumpy anyway because they are more transaction based. And what we saw was a weaker performance in that space as well. Revenues were down around £11 million there. But then we saw really strong growth in our risk advisory and securities business, revenues up 36%. So what we're beginning to do is build a more resilient platform so you can start to see, if one area of the business doesn't perform as well, it's offset by another area of the business. What I would say though, under all of this, is that fixtures grew by 8%. And what that means, a fixture is effectively a transaction, a deal that we've negotiated with a charter owner. We grew them by 8%. So our overall market share grew.
Yeah.
And the reason dry cargo dropped was entirely rates driven. So you do see this rates movement, but we are building a more resilient platform. So I'm very pleased with these results and how we've maintained our revenue on what was a very high base in the previous financial year. Underlying profit before acquisition related expenditure was 18.1 million, which is 2 million lower than the previous year. Again, there's quite a few moving parts, but the key thing really is that we did have a foreign exchange translation swing. We had a 1.5 million gain in the prior year and a 1.1 million loss this year. There's a 2.6 million swing. On time you take that into account, we're broadly flat year on year.
Okay, so in summary is there's a plan. The plan seems to be sort of paying off, etc., for the group. What's interesting is then what you do with the cash that's being sort of generated out of the group. So I want to focus on the dividend, 13p dividend, which is 3 times covered by underlying earnings. What's your sort of thinking in terms of dividend policy and returning capital to shareholders now that the sort of company's ended the sort of second year with net cash?
Yes, so we've ended net cash with £1 million. Previous year it was 6.9, so it's down a bit, but it's still positive. And if you look back previous to that, the business historically had a net debt position. Been a big focus of us to get to a net cash positive position. You've done. From a dividend perspective, we went out a couple of years ago and said that we have a progressive dividend policy. And so you've seen our our dividend tick up. It was 9p in 22, it was 12p in 23, and now we put a penny on it to 13p for this year. So we're committed to that progressive policy of gradually increasing our dividend year on year. Now, what we do want to do when we think about our cash, though, is ensure that we have sufficient cash in the business to make these acquisitions. Coming back to my earlier point, the market is very fragmented. We want to ensure that we can finance these acquisitions. The acquisitions that we made of Southport, Madrid, they were entirely self-funded. So we want to ensure that we can take advantage of these market conditions to fund further acquisitions. And then
outlook for FY24. So you're through the start of the year. How's it started? And what trends are you seeing for FY25?
Yeah, so as we started this year, it's pretty much in line with where we expected.
Yeah.
If you look, dry cargo rates are broadly where they are. They seem to have stabilised. Tanker rates seem to be holding firm at the moment. But we have started the year with a very strong forward order book. One of the benefits of our business is as we go into each financial year with a forward order book, which actually goes out many, many years. Our forward order book goes out as far as 2039, and that's made up of time charters where an owner has effectively let the vehicle to a charterer for a specified period of time, and there'll be commissions coming through, as well as sale and purchase, and in particular new build, where we've negotiated a deal, but it's going to take a couple of years, 2 or 3 years for the yard to actually build the vessel. And so we see stage payments of commission coming through. And we started the year with a forward order book of $82.6 million. That's up 47% from where it was a year ago. So that gives us some visibility going forward. The real strong growth we've seen there is really the new build business.
Yeah.
So we are seeing new builds increase. And if you think about the global fleet, what you're seeing is a fleet that, yes, it's grown, but the fleet is getting older.
Yeah.
If you look at the charts, you'll see that a high proportion of the fleet now is over 15 years old, and 15 years old is really a sort of cut-off point where vessels generally get scraps, and charterers don't particularly want to necessarily charter a vessel when it's over 15 years old. So you're going to see a scrapping of vessels coming through. There is only limited capacity within the yards. That's cut back post the global financial crisis. So we've seen new builds increase, which has complemented our forward order book. So we're going to see vessels leave the fleet, new vessels coming, but that's probably at a slower rate, which again, bodes well for rates going forward.
We can wrap up on a bit of fun. I always like people who are new to the business and ask, what was the one thing that surprised you when you sort of, a bit of pub trivia, you learned something about shipbroking, or something, an interesting fact about Braemar that you discovered as you sort of landed and sort of got to know the business?
I think the first thing is just the sheer sort of oversight you get of global trade within shipping, and you really do see that these goods moving all around the world. It gives you a good insight into that, but when you take a step back, that's quite obvious. I suppose interesting fact around Braemar, that when Braemar acquired ACM, their previous offices before we moved to Trafalgar Square were actually a church in Marylebone. It was based in a church in Marylebone, and then the acquisition of ACM meant the business was too big, and that's where we moved to our current offices.
Okay, very good. Grant, it's been a pleasure hearing about the business. Looking forward to seeing the progress you make with Braemar. Thank you very much for watching. If you want to read more about Braemar, please visit the Edison website. Andy Murphy's notes on Braemar are available there to follow, and we'll put a link in this video for you to go there. Thanks very much for joining Edison TV. Grant, great to have you on.
Thanks very much. Thank you.